Yeah, hi, welcome. My name is Paul Archer. I want to share with you some nuggets of information, some quality information to help you and your venture into the mortgage market, the mortgage sector, taking CeMAP and all those good things. Thanks for signing up, by the way, for the question of the day, and I hope you've been getting them right. I'm sure you have been. So I want to give you some information now. I want to split this down into a number of things. I want to talk to you about the CeMAP exam itself. What is CeMAP? How does it work? Things to bear in mind there. And then when I get into the actual industry itself, I'm going to talk to you about how the financial services industry works, particularly involved with mortgages and how mortgages are sold and how they work really well. Then I want to take a look at jobs. What kind of employment opportunities are there available to you? And then finally, we take a look at the support that we can offer you here at Archer Training. And then I want to give you a few insights into the future. So why am I able to do this? Well, I guess I've been around for a long time. I started off in the building society business way back in 1980. Now, that's probably before many of you were born, but I'm okay with that. It's not a problem. I started off in sixth form, actually. I got a Saturday job working on the counter whilst I was doing my A-levels. I then went to work for building societies, had some good times there, into insurance sales and training and management and sales management. So I've had a host of experience, been in the business over 30 years. So I want to share with you some of the insights that I've got. First of all then, what is CeMAP? What is CeMAP? Now CeMAP, as you probably know, is a entry-level qualification examination. So let's get the trusty flip chart going, shall we? What is CeMAP? It's high technology, isn't it? But it works really well. So what is CeMAP then? Well, CeMAP is a qualification. It's set at some A-level standard. So it's not to be sniffed at, it's a complex examination. And those people who want to get into the mortgage advising business need to pass CeMAP or its equivalent to start with. So how's it broken down? Now, you're probably aware that CeMAP itself is broken down into three separate papers. You've got your CeMAP 1, you've got your CeMAP 2, and you've got your CeMAP 3. These are separate exams that you have to book separately, go along to the exam testing centre and take the multiple choice papers that they are. Now, they're all multiple choice. It's all computerised now, as you know. You go into your test centre, you log in with them, and you have your 2 hours in which to do the exam. And at the end of the exam, you get given your result, which is pretty spooky stuff, isn't it? It's even better, of course, if you pass. So what is the pass rate then? Well, the pass rate, or pass mark, I should say, is 70% across the board there. 70%. You get 2 hours, as I mentioned to you, to do the exam. It's not pressured when it comes to time. Many candidates have said to me in the past that 2 hours is very, very adequate in order to pass the examination. So you don't need to push yourself so much. But you do need to know your stuff. So what do the subjects actually cover then? Well, first of all, the subjects are broken down. This one, for example, number 2, is mortgages. Number 3 is also mortgages. But number 1 is financial services. Now, number 1 is the trickiest of the 3, really. Some of the subjects, some of the topic in there is quite in-depth. It's quite dry, if I'm honest with you. Half of it is regulations and all the different laws and regulations that affect financial advice in its entirety. CeMAP 1 hardly touches mortgages at all. It's the entry-level examination, which is equivalent to other people starting in the industry. So if you're going to become a pensions advisor or an investment advisor, you need some form of CeMAP 1 or equivalent really to take and to pass. It's heavy on the taxation, on the products, all the different product areas, and as I mentioned to you, regulation as well. In CeMAP 2, you get into the mortgages and house purchase field. It's broken into 4 units. It's about buying a property, buying houses, selling houses, the legal side of conveyancing. It's about taking out a mortgage, applying for a mortgage, surveys, valuations, different types of mortgage product. It's big in protection as well. Obviously that one covers protection. It's big in protection. It's also big in post-completion matters. So when you've bought your house and you're living in there comfortably, all the things that go on afterwards. CeMAP 3 is also mortgages. In fact, it's the same syllabus as CeMAP 2. Except you also get tested heavily on the mortgage rules, which of course are important. This one covers all the rules in financial services. This one covers the mortgage selling rules. And it's just tested in a different way. You see, you get case studies given to you here. You get 6 case studies. You're supposed to digest the case study and then answer multiple choice questions based around the case study. So it's the same subject, just tested a different way. So what you should do, really, is you should do this one first. You should start here. And then you should do these 2 together second. You should study the 2 of them together and take the exam either on the same day or 2 mornings consecutively. I say do this one first. The IFS do this for a reason. The IFS, of course, who run CeMAP, let's give them a bit of a plug through. The IFS School of Finance. Good friends of mine down in Canterbury and London. They run the exam themselves. Now they suggest you do it 1, 2, 3. So do I. Why do you think they've done it in the right order? Some people go for 2 first and then they go to 1. It all gets a bit mixed up and confused then. No, you should do them in the right order because they build upon each other. Costs-wise, well, you have to pay some money to the IFS. It's around about 160 quid per exam, but do check with them because prices do go up each year, of course. So it's quite a lot of money. It's not shy of just under £500 to actually book the exams themselves. And as a result of booking the exam, you get given the big textbook, if you like, which you can then self-study. But a lot of people like additional help to help them pass the exam. So that's pretty much what is CeMAP. It's not to be sniffed at. How long does it take to study it? The IFS reckon 80 hours per paper. I would say 80 hours combined there because it's the same thing, isn't it? Probably a bit more than you need. We recommend 60 or so hours per paper, so 120 hours, 130 hours in total. And that depends, of course, how much time you've got available to study. A lot of people like to go on a training course for a whole week, and that's great. Some people like to do an hour or so a day. And if you did that, our course works that way, you could get the whole thing done in 2 to 3 months. But it's tough. Don't be underestimating the detail that you need to study to get through that paper. So that's what is CeMAP. How does the mortgage industry work? So let me give you some ideas about the mortgage industry and how it works, and give you some thoughts about what you can do to fit in. Well, first of all, the mortgage industry is geared around having people who are looking to buy and sell property, but also people who have their existing property and they want to remortgage it. So there's a property. It needs to have a lot of movement in property. I did a number of years in a estate agency back in the 1980s, early 90s. It's all about volume. And naturally, it's all about people who are selling their house there for sale. If somebody's looking to sell their house, then they'll look to buy another house probably, and that creates the movement. But some people just like to remortgage, in other words, change the mortgage they've got on their existing property. In the market, you've got first-time buyers. First-time buyers, and then of course you've got your second and your third and your fourth buyers as well. Now, any market grinds to a halt when you run out of first-time buyers. And that's what happened with the credit crunch back in 2008. The number of first-time buyers just dropped completely. They all started renting properties, and many still do, and that's because of a number of reasons. The unavailability of mortgage finance for a number of years, back in 2009, 2010. House prices were beginning to fall, so first-time buyers were reticent to go and buy, so they just all went on and rented, got their 6-month short-hold tenancies, and that's how they got their place to live in. So that's fine. The other area that you need to be looking at are buy-to-letters, buy-to-lets. These, as you can appreciate, are people who are not buying a house for their own purposes or even remortgaging. These people are actually buying a property to rent. And this was huge back in the noughties. Pretty much came to a halt in 2008, but it's still been trickling along quite nicely. Lenders are quite happy to lend to people who are looking to buy a property and rent it out. And they lend on the basis of the income. If you think about it, if first-time buyers aren't buying properties, they're renting instead, then obviously there needs to be a good stream of rental income. So the buy-to-let market's been fairly healthy throughout the whole period of the credit crunch. It's really beginning to pick up now as well, because some house prices are quite low, and therefore you need to be able to get a good price to get a good rental yield. But it's all to do with first-time buyers and second-time buyers. Now the first-time buyers are back. The reason they're back is a number of reasons, really. Firstly, the mortgage market or the housing market is beginning to stabilise slightly. Who knows what's going to happen in the future? It's all about the availability of mortgage finance. There's more and more really good schemes coming in now. You see, when 2008 occurred, it was to do with the subprime crisis, and lenders, the banks, all had toxic debts, toxic loans. They were so wary of lending and not getting their money back because they were sitting on all these toxic loans as well, which they sold off as well to many industries. Now, the problem they had, therefore, is they were reticent to lend high lending. Their lending criteria, which they used, the multiples of income and things like that, became really strict. The FSA didn't help because they came in and made strict rules. The Mortgage Market Review has told them to be very strict with their lending and not to lend huge multiples of income anymore. The ridiculous lending that went on in the early noughties, of course, came to a complete halt. Now that's eased off a little bit now, and you can get yourself decent mortgages now. First-time buyers are therefore coming back in. They're getting the high percentage loans that they weren't able to get the last few years. And that's pushing the mortgage market up now. And activity is beginning to happen. People are buying and selling a bit more. Estate agents are happy, of course. People are continuing to buy to let, so there's still property being bought to let out, of course. And the first-time buyers are back, and that drives the market. You see, a first-time buyer buys the flat, the seller of the flat buys the house, the seller of the house buys the big house, the seller of the big house buys the mansion, and that's what you call the housing chain. But it all has to have a first-time buyer to kick things off. Okay, so where does the money come from in the mortgage industry? Well, broadly speaking then, you've got the lenders, the banks, the building societies, the specialised lenders who lend and borrow from the wholesale market. They're the main providers of finance. The banks and the building societies are still the big players in the market. I was doing some investigation this morning. You've got a few additional lenders coming through now. The post office, for example, are lending. The Tesco's, Sainsbury's, the big supermarkets are lending now as well. So there's a little bit more competition coming in. The banks and the building societies, there's not many building societies left anymore. The banks all merged up, didn't they, in the 90s and noughties. So the competition's not there yet, but it's beginning to start coming in. It needs some centralised lenders to come in to offer new schemes, new mortgages, in order to create competition. But money is getting cheaper. The Bank of England came in with their funding scheme. The Bank of England have given, the good old Bank of England, got a Canadian fellow heading the place up now in the Bank of England. The good old Bank of England brought in this thing called the Funding for Mortgage scheme. Basically billions of pounds they gave the lenders to lend out really cheaply. What a great wheeze that is. So the banks and the building societies have got really cheap money now to lend, which they are at 2, 3, 4% interest rates, which causes people to buy and sell. So who does the selling then of these things? Who does the selling of the mortgages? Well, as you can appreciate, you've got your lenders, you've got your banks, your building societies, you've got staff inside the branches who will talk to customers. They also have big telephone call centre setups where they have reams of people with computers and customers phone in. They go on the websites, of course, get all the deals, they contact the lender, and you go through a process. You have to receive advice now. There's no more non-advised sales anymore. You have to get full advice wherever it's on the telephone, wherever it's Skype using video technology, which a number of lenders are moving towards, or whether it's face-to-face. The other major part of the market, which you might be considering, is the broker market, the mortgage broker. Now, the mortgage broker is an intermediary. He or she, if you like, comes in the middle between the bank and the customer. And they act as a middle person, a middleman. And they provide finance to the consumer, but they get the finance from banks, building societies, and centralised lenders. The last 3 or 4 years has seen a big drop in the number of mortgage brokers, particularly the small independent ones, the self-employed ones. They've not been able to make a good living, so many have dropped out of the market. But they're beginning to come back in now. The main reason is that the lenders now need them again. For the last few years, they've had mortgage money which they haven't had a lot of difficulty lending out. Particularly the ones with the large branch networks, the big websites, the big marketing budgets for Facebook and Twitter and all these things. They've been driving the customers towards them and lending out the money quite easily. But now they're getting bigger lending targets, they want to lend more, now is the chance for the brokers to come back in. So that kind of brings us on to the next stage then, about jobs in the industry. So that's how the mortgage industry works, really. It's beginning to move again, which is good news for everybody, isn't it? Because if people are buying and selling property, that there's transactions going on and everybody in the chain makes a good living, but also consumers feel better about the property they live in, and then they spend more. It's all about confidence. I don't care what people say, but an economy is all about confidence. If you're confident of the future, then you'll spend your money. You earn your salary and you'll go and spend it. You'll take out some more HP or credit, whatever it is, if you need to. It's all about confidence, and we haven't had that for a few years. By having a house which you live in, which is accumulating in value, makes people feel confident, and that pushes the economy. Let's now move on to my next question. My next question, and it's probably one that you're more interested in, Harry. What are your employment opportunities within the mortgage sector? What sort of things can you do? Where can you work? How can you work? And how's it going to work for you? But broadly speaking, there's two types of opportunity in the mortgage sector. There's employed positions and there's self-employed. Now, employed people, here we go, employed people. I'll put a little picture there for you of our employed, called this guy Joe. Now Joe, there you go. Joe is an employed mortgage advisor. Now, he wouldn't have his name on his t-shirt, would he? Although it probably is quite relevant in some website-based sales activities. But because he's employed, he works for somebody. He works for somebody in the industry, either a bank, a building society, a large brokerage maybe. But he's employed, he's paid a salary. Now Joe likes security. He likes to sit somewhere where he gets lots of leads given to him. He gets customers from the bank branch, from the estate agency office maybe he's employed by. Wherever it is, doesn't matter. He gets people coming to him so he can then advise on mortgages and protection and all the things that are required. Joe is paid a basic salary. He may get some commission, some bonus maybe, according to the amount of business he sells or how compliant his business is. That's fine. But broadly speaking, Joe likes the security of knowing that there's always people to talk to, there's always customers to sell to, and he's got the security of a large organisation behind him. That large organisation can supply things like training, continued professional development, a good management structure, sales manager who's able to coach him, get him better. Obviously they provide all the technology and all the customers and all the leads. But they also supply him with the FSA or the regulator, of course. The regulators, there you go. The regulator needs obviously to approve everybody that's in this business. More to that, of course, CeMAP 1 will talk about that. But they also provide him with the authorisation, the regulation that he needs to be able to trade legally, if you like. So it's all quite tidy and neat, really. And as a result of that, he'll get himself a good salary. It depends where you work. 20,000 plus. You can get 30, 40,000. If you start moving into the IFA arena and start selling, getting authorised for other product areas, then of course you can earn more as well. And you can rise the ladder, get into sales management, sales directorship, whatever it is, into training, compliance. There's all sorts of opportunities available to you because you have a career ahead of you. Now the other option for you, we'll do this one in a different colour, is self-employed. Self-employed. And we'll put our self-employed person here. Here we are. Here's self-employed Sarah. There we go. Apologies to all the Sarahs in the world, but it kind of goes with self-employed, doesn't it? Self-employed Sarah, though, is not wanting to work for a big corporate. She doesn't like the idea of being tied down, I guess. She likes the idea of being free to do as she wishes. Self-employed Sarah is going to be working or linked with some form of mortgage brokerage. She will either get her authorisation from the regulator herself, or she'll go via a brokerage, a mortgage brokerage, who will have her on the books as a self-employed mortgage broker, mortgage consultant, mortgage expert. Now Sarah, therefore, has a lot more responsibilities. Yeah, she's still got an authorisation. She has to do the same thing as Joe does, of course. There's no difference there. But the big fact about Sarah, though, is that she has to get her own customers, her own clients. She may get them from the brokerage, the umbrella which she's part of, but she probably has to do some prospecting to get some more people to come and see her. The other thing about self-employed Sarah is that she will probably earn a bit more money. There's more risk there as well, of course. Risk gives you potential reward, doesn't it? Because she's earning her money through commissions, through fees, pay-as-you-go kind of thing, she will probably earn more money than Joe's basic salary. But there may be some periods in which she won't earn any money at all. Quiet periods such as August, for example, or December. So she'll have to be self-employed and button things down that way. Obviously there's different taxation situations as well, which you'll learn about in CeMAP 1. So that's pretty much the employed versus self-employed route, really. So how does this all work? Well, these people can be in their offices, in their branches. Sarah might go and visit clients in their home. They might get some technology working for them. This is a big area now, technology, where people use Skype or various other video-based communications or just the phone in order to speak with customers. And that's happening more and more now rather than face-to-face selling. So they're the employment opportunities for you. If you're looking for either of these, then you need to get Googling, get onto the websites, find out who's advertising, who's promoting businesses. The banks, the building societies are generally always looking for trainees. Remember, they're all expanding now as well. The telephone centres, the video Skype-based call centres, they're expanding as well. So find out what's going on. You generally need to get your CeMAP first, because although they'll train you, they'd like you to have CeMAP first, which will enable you then to come under their wing. CeMAP 1 is a good starter. You may be able to get some self-employed opportunities or maybe some employed opportunities. If you're self-employed, you might want to get yourself a good network. Start investigating the various mortgage networks that are available. Things are changing so much in our industry now, but a good mortgage network is definitely where you want to get to if you're self-employed. So there's a few thoughts then about employment opportunities. Okay, let's go on to my next question then. Let's talk about what support can we give you at Archer Training, or myself, Paul Archer. What can we do to help you? Well, we specialise in helping financial services salespeople to earn their revenue, earn their bonuses, and that of course includes mortgage and protection advisors. We have expertise which can help you to pass the exams, but also when you're starting to practice, we have expertise to help you to sell, engage with customers, all the different skills and techniques and strategies you need to set up a really workable business. And how do we do this for you? Well, we have courses, we have online courses, we have lots of material you can download, particularly for CeMAP. We have our flagship, which is the Home Study Pack, or the Home Study Kit. This enables you to pass CeMAPs 1, 2 and 3 in the comfort of your own home using technology. We send you information, we send you links, videos, such as this one for example. We send you audios, you can listen to them. We send you reading material, we send you tests. It's all done via the internet, and we kind of like take you through a 30-day sequence. In other words, each day we send you some information and you do an hour to an hour and a half to 2 hours of work a day spread over a 30-day period. You can do it quicker or longer if you want to. That's our flagship product. Within that product, we have everything that we produce for CeMAP. Everything's in there. You even get tutor access as well. So if you've got a question, you can send an email to a tutor and he or she will answer your question for you fairly quickly normally as well. Afterwards, we're there on hand to help you with career guidance, give you a few people that contact us. We're not a recruitment company. We don't do that, but I know lots of people in the business. I know who's recruiting, who's not, so I can help you out there if that's of any use to you. Now, on top of the Home Study Kit, we also sell all the other products as well. So, we've got the MP3s, there's your music thing there as well. We've got the videos available to download. There you go, a little computer there. We've got the books, the e-books. We can get them printed as well, the revision guides, the active learning workbooks as well, we've got those. We've got online tests which you can buy as well. There's all sorts of things on the website which you can go to and help you. So this is where we help you really as much as possible. And it's all very cost effective, that's a good thing. Because there's no face-to-face training going on, it's all digital, then the costs, we're talking about £10 for a book, £10 for an online test system, 20 quid for some MP3s, maybe videos. The online study kit itself is way below the £200 mark, including the VAT. So we keep the cost down because we know that you've got to fork out over £500 for the IFS fees as well. So that's the support that we can give you. Obviously afterwards we can help you with jobs I mentioned to you, contracts or contacts to help you with employment as well. And that's something that might provide some assistance. Okay. Last question, the future. How's the sector changing? You've got to think about this, because we're moving so quickly, aren't we, in this world of ours, so quickly. Now, the industry itself is broadly divided into two sectors. You've got the mortgage and protection sector, and you've got the IFA sector. Yeah, there's a lot in between, of course there is. IFAs, independent financial advisors, have just gone through some major changes. The regulator has imposed a number of changes on the way they operate. First of all, they have to promote their business on a fee basis. In other words, they charge a fee. Now, mortgage brokers can charge a fee if they wish to, and many do, but they also receive commission from selling the mortgage and the protection policies that go along with it. IFAs can't do that anymore. They're into fee-based advising. So they've kind of moved to a different space. They've now segmented their market, segmented their client base, more for high net worth people who are willing to pay a fee per hour for the IFA's time. And therefore they're metamorphosing themselves into a different sector. That's opening up a big gap now, of people, clients, customers who don't want to pay a fee to an IFA for advice, but they want some advice as well. So there's this big void that's opening up. Meanwhile, you've got your mortgage brokers we've been talking about, your employed, self-employed mortgage brokers who still receive commission, but they have this sort of a restricted product area of protection and mortgages, which is fairly restrictive, depends what you're looking for. So this big gap then is going to be filled by advisors who are connected to one lender maybe, who are not fully fledged IFAs. It's all a bit in flux at the moment, but there's a massive customers there looking for advice, looking for help in their financial circumstances. So the regulator has now moved away now from the IFA, pretty much got that sorted. They're now looking to the rest of the industry, the rest of the sector, and they're going to put their beady eyes on the mortgage and protection industry to see what those people can do to help. They're going to up the ante probably on the qualifications. So at the moment it's CeMAP. In the future it may be the DIP-MAP, which is the new qualification. Have you heard of that one? DIP-MAP. Diploma in Mortgage Advice and Practice, the DIP-MAP. It's a level 4 diploma. CeMAP, just to let you know, is a level 3. That's just the way they tag these things. So it's a bit more advanced, really. It's a 9-month program. We provide support for that this year. You may wish to start looking at that as well, if you wish to afterwards. It's all to do with mortgages. It may become, nobody knows yet, the minimum requirement. This mortgage market review, as they call it, the MMR, that's the title of the regulator and what they're doing to the mortgage industry. They're reviewing the mortgage market. Pretty good title, really, isn't it, when it comes to it. It'll change the way remuneration works. It will change the way lenders operate and lend to people. It's tightening up lending criteria as well, which is quite important. And it's changing the way they do business. For example, the non-advised sales is gone now. All their people must be advised salespeople. And many more people are having to do their CeMAP as a result of that. In this middle space, it's the rise of the sales forces. The insurance companies, the product providers of financial advice are going to start to bring in their sales forces again. I firmly believe that. But they'll not be like face-to-face salespeople. They'll use technology a lot more now. Yeah, telephones there as well, but it's this video technology. The iPhone, FaceTime. People have got netbooks now and tablets and things like that where they can actually talk via Skype. Customers have got this technology now, so that's the best way of moving forward with a sales force. So if you're looking for a future career, mortgage advising, protection sales, really good start. But your clients that you meet having mortgages and remortgaging, buy-to-let, whatever, will have other financial needs. They will. They may go to an IFA. They probably won't. So you'll probably want to look into the ways in which you can provide additional services and advice to your clients, and therefore give them full advice to help them in their financial needs. Pensions, retirement, investments maybe, savings, who knows what it is. That's an area for you to move into possibly in the future. I think there's a big gap there of customers who need that advice. So that's the future, really. Who knows what else is going to happen? We'll always be in touch with what's going on because this is our sector. This is where we focus. This is where I focus. This is where I concentrate. Many of my clients are in the corporate sector, they're corporate clients, so I'm talking to sales directors, owners, CEOs, people who are in the know and making strategy, so I know what's going on. So if you want some ideas, give me a call, or better still, drop me an email, because I'm never in the office. So there's some ideas for you. I hope that's been useful. We found out about the industry, about CeMAP. I've given you some insights about what's going to go on in the future. I think it's a great sector, I really do. I've been involved in mortgage and financial advising all my working life. I think it's a really noble thing to do to help people with their financial advice, their financial situation, arranging mortgages for people, helping them to buy their dream homes, remortgaging, keeping an eye on their finances, just being in the know with financial circumstances, being able to talk to people about financial terms, reading quality papers, reading The Economist, helping my son with his A-levels, economics and business studies. All these things have been good to me. So I'm hoping that the same will be good to you as well. Remember, give me a call if you want to talk things through at all. You might be able to catch me on my mobile, you probably won't. Drop me an email. Hook up with me if you can, do on LinkedIn. My LinkedIn handle is on the top of the web page of archertrain.com. Go onto my blog, paularcher.com. I blog every week, twice a week, on sales-related matters, ideas and tactics and techniques to help you in selling. So there's lots of information there. The videos are posted every week to YouTube. These give you another sales tip. It's all about selling and financial services. So I want to help you beyond just the technical side of things on CeMAP as well. Get me on Twitter, Rapport Seller, at Rapport Seller. That's my Twitter handle as well. Facebook, I'm on there as well. You can like my other page. I've got a personal Facebook page which I let anybody on because I just share a load of things as well. That's really been it for me. So I hope you're having a great day. I hope you're enjoying the question a day from CeMAP. We'll keep sending you questions, and I'll probably add a few more videos in the mix to bring a bit of variety to your studies. I hope you will. Have a great day. Bye.